Well, natural gas blasted higher again on Friday, pushing well above the $5 mark with the kind of swagger that suggests the market has completely forgotten how gravity works. As usual, it's acting like a slippery bar of soap, darting around in whatever direction creates maximum confusion. And right on schedule, an Arctic blast is rolling into the northeastern United States this weekend, conveniently ramping up demand and giving the bulls another victory lap. Over the past 24 hours, the outlook for upcoming storage draws has shifted sharply, and now the forecasts are pointing to significantly larger than normal withdrawals for the next 3 reports. Next week's draw stands out in particular, with expectations jumping to a hefty 160 billion cubic feet compared to the typical 89 billion cubic feet average for this period. In other words, all 3 upcoming draws could easily push toward the upper end of historical norms, if not exceed them outright. Given that setup, it's no shock that the bulls are scrambling to cash in on the moment. They finally have fundamentals that actually justify their enthusiasm, and they're wasting no time leaning into it. At this point, buying pullbacks is still the strategy, although the market seems hilariously unwilling to offer any real ones. After breaking above $5, dipping back under it, and then charging above it again within roughly 48 hours, the level now looks like an unofficial floor. The market practically slapped a do not cross below sign on it. A few days ago, I noted that $5 was a key level with strong resistance above it, but now it looks like the bulls are trying to push the market towards $7, similar to the winter 2022 rally. With the latest surge in momentum, that kind of move is starting to look increasingly possible. Still, this breakout carries a faint smell of something off. In 2022, prices were rocketing higher for a very clear reason, a full-blown global energy crisis that sent gas and oil markets surging everywhere at once. Today's backdrop couldn't be more different. Oil prices are drifting lower, European gas just sliced straight through the €30 floor, and the broader global energy complex is nowhere near those crisis-level pressures. So while the chart suggests ambition, the fundamentals make this rally feel a bit inflated, like US gas is trying to reenact 2022 without the supporting cast. Natural gas is trading around $5.40, near the top of its range. Momentum is strong, and the market recently broke through old resistance levels. Key support is at $5. Any dip to this level is likely to attract buyers. Immediate resistance is around $5.35. If this zone is cleared, the next upside target is $6, similar to previous winter rallies. Of course, if the bulls ever get a reality check, don't be surprised to see prices tumble below $5 and make a leisurely stroll down to $4.80. A pullback or consolidation could occur, especially if demand drivers weaken, as if the market decided it was time to remind everyone who's really in charge. Volatility is possible if weather or demand forecasts change unexpectedly. If you enjoyed the video, drop a comment, hit like and consider supporting the channel, it really helps keep things moving.